Hey everybody, good evening, and welcome to tonight's free market update for the futures markets. This is Neil, and I'll be doing the videos tonight. Um, John's on vacation, and so he'll be back in the next just couple of days. And I want to look at, for tonight, the setup that we were looking at yesterday for today's trade and what that may tell us about tomorrow. All right, so let's see if we can learn something from yesterday in today, and that leading us into tomorrow. So we were looking at a few things. I'll start with, it doesn't matter, a couple of few. I'll start with the yen. Japanese election news, big selling in the yen for a couple of days. The question was, is that sustainable realistically? Not so much. We were looking for a little bit of a bid back against that recent loss. If that's the case, then that led to higher probability retracement in the stocks. There was one. The next was the treasuries and the fact that we had a 2-point loss yesterday. Is that momentum sustainable? Answer, not so much. Looking for a bid back against some of that was lost yesterday. That happened today, bid back up a point. If that's the case, then higher probability lower for the stocks today. And then also in gold, we bid from year 2011 highs into some recent lows into this 1377 level right up here, which is a 0.382 retracement on that chart that you'd be best suited going to like a weekly chart in order to find what I'm talking about, but that's a 382 retrace. And that fell off down into a 23.6 retrace, which is on the averages and one deviation off the current mean average. And so with that, is the recent selling sustainable? Higher probability not. With that, a little bid back against the recent selling in gold. That's the case. Higher probability selling in the stocks. Okay, just making the case. And then in the NASDAQ, this is funny to say that it was only up a 0.5% yesterday, but you know what? The Russell was up 1.16 and the S&Ps were up 0.75, etc., etc. So we say the NASDAQ was only up a 0.5%. And so with that, question was, is this a bit of a warning flag that we can look for some pullback, a little bit of a pullback in the stocks today? And so now that leads us over to what did we get? Answer, not much. We put in some new all-time highs last night at 2152, then pulled back 12 points into 2139.5 or 2140 today. Went out right on the mid, forming essentially a doji today. So we have essentially a 50 by 40 closing at 45.46 today on the mid doji. And so did we get a pullback? No, not really. We pulled back a whole big whopping 10 points. And so, that's not really much. In fact, for it to even be a pullback, we'd have to pull back something 15 to 20 points, something like that, before you'd even really, give it thumbs up, like, good job, So what does this tell us? Well, historically, the higher probability is that we trade higher into the expiration. I was looking for a 1 to 2 day possibly pullback before we bid into that expiration. If that's the best they can do, then the answer is you still at this time need to remain bullish until we get something that says otherwise. At this time, we don't have anything otherwise. We've got, if you look at here, these are higher lows all the way up. That's called one time framing. We are one time framing higher. And until we can break that, obviously we don't have the possibility or chance of a real pullback, because the first thing you have to do is breach a prior low, obviously, right? So we're one time framing higher and continuing to do that. The value is being accepted and/or presented as being and accepted as being higher on a daily basis, where we're getting value or point of control continually higher. So, at this point, it's a buy the dips type of a market. Whether the dip is a 10 or a 20 point dip, you need to, it appears, remain in and of that mindset, remain in that camp. We'll find something that'll give us there's a doji today. That's a bit of a heads up for some people, but yet we had the heads up from the NASDAQ yesterday. We'll find something, and it very well may be after the expiration that we get to enjoy some volatility. It'll come. It will come. It always does. We'll get some volatility that'll, we'll enjoy. It'll bring us back into the averages back here, and we'll get to enjoy that at that time. Until then, we've got to trade what's in front of us, and that appears to be just, lower left to upper right. Um, Let me. I'm going to show you a link that you guys can go to in case you don't know about this. We're simplertrading.com/flow, and if you go to this link, then you can you'll find a page that looks like this, and basically all you have to do is put your name and email address in here, and you can hit subscribe, and you'll get access to our nightly videos in case maybe you're finding this on YouTube or something like that and you did not know. But this will grant you access to the free videos every night. Now, also, in case you don't know, we've got divisions, I guess, if you will, under Simpler Trading, the umbrella that is for options, simpler options, the stocks venue, the equities venue under simpler stocks, for you currency traders, simpler forex, and then the futures videos like I'm doing tonight under simpler futures. Okay, but simply no cost, no expense, no obligation, and nothing like that. Just your name, email address, and hit subscribe, and you'll be granted access to our nightly videos. And so certainly do hope this helps. You guys have good trade, nice evening, and look forward to being with you again at the next update. Good night.